Hello guys, how are you doing? How are you doing? So again, we have 2 days left of 2024. To be honest, I don't expect much to happen. I'm working on an energy outlook for 2025, where I'm looking into coal, I'm looking into oil, uranium, obviously, gas, and hydrogen. Um, if we get the correct, environment setups, I think energy could be a good play in 2025. But this video here is the stocks that you have submitted in one of the posts that I've made. I have 10 here. There are, I think, 15 more. I will do it in more parts, maybe up to 3 parts. This video here just to keep it simple, and we don't have like a 45-minute video. So this will be very quickly here. I will spend 1 minute per each, roughly. Sometimes I go out of a tangent, I know, but yeah. Let's see here again. The Nukes ETF, again, an ETF I wish I've known. Some guy or girl, of course, member mentioned this a few weeks ago, a month ago. I looked into it. It's a beautiful way to play the uranium sector, but not the miners. It's a beautiful one. I have made a video on it. Go check it out. So Nukes here. Again, Nukes, massive uptrend 2024. We are up, I think, like 60%, roughly. Yeah, 60, 70% already. Pretty cool. And we did have a little wedge pattern going on there. Holding 41 here, holding. So as long as we are holding here, it's actually quite good. And if we fail to hold here, I'm expecting to be buying myself here when we hit that lower trend line. Obviously, stops below here somewhere, right? We have to play. We have to protect ourselves. But overall, massive uptrend here. We can put on the weekly here. 30 weekly is coming up nicely. Support is holding from the previous ones here. And yeah, the only thing I will say is that this could be a topping pattern where we're actually going to come down a bit here after that. But we shall see. We shall see how that plays out. NMG, that is new. Murchison, gold. Difficult. Difficult to say here. Zooming way out, we have 20 years of data, and it has been nothing but down. You can see here, big lower lows. We have had four. Typically, you only get three, but in this case, we had a fourth here in 2023. Uh, Again, rarely do you see four, so I'm expecting actually that it is working on a bottom here, and this is my view actually. Hopefully, something like that. So I need this one to break out of the golden downtrend, roughly here, getting above, let's call it 2 cents, 0.02. So getting above 2 cents and basically getting above right there. That is when you enter. Until then, don't do much, to be honest. And also note this little internal trend line break here with the bull flag there. So we broke out. So that is definitely a start. Actually, this is a 10-year breakout internally of the overall bigger picture. So yeah, really cool. Again, if you want to get in early, you could be buying the retest there. But personally, just wait for it. I mean, these small guys here, they are 60 million. Again, wait for the overall 15-year downtrend to get broken, and then you enter. So look for that 2 cents breakout for NMG. AEC, that is uranium, if I'm not mistaken. Massive downtrend, basically 10 years together with the entire uranium market, and we are finally going sideways. We haven't been catching a lot of momentum. Usually when you break such a downtrend here, you are initially seeing a pop, and then again, you could of course go back, but initially you usually see a lot of momentum. We saw a little bit of a peak out here, and then we had this whole 2-year, 3-year period of nothing, and finally we started to turn. But it's not the biggest momentum. I will have to say uranium hasn't been doing well in 2024, right? So the downtrend here has been broken. And now we're working on the sideways stuff, the stage one. And we're basically waiting for a stage two breakout. And I could say here, definitely when we get above 20 cents to 24 cents, roughly, this little level up here, definitely that is a good way to get in. Oh, excuse me. Again, that is a good way to get in when we get above here. If you want to get aggressive, again, there are some downtrends here that, again, you can see we're breaking it here. So you can see this whole from 18, 21, peaked it here, breaking out, trying to hold here now. So if we start to trade higher, again, you could be early if you want to play that game for AEC. But keep in mind, even though you have the stage 4 here, stage 1, it doesn't mean that we're going to have stage 2. It could be stage 4, stage 1, and stage 4 continuation. So be careful. Newfound gold. I actually spent a lot more time on this chart, and I only have a parallel here than I did on all the others. We could even delete that, and you can see that we have a little bit of a channel going on here for newfound gold. It hasn't been performing well. I want to do something like that, right? That is probably the best picture. And we are close to the IPO level down here at roughly 1.4. So if you want to buy low here, I mean, it's not technically perfect, but again, you have a big stock that is down 90%. You can sprinkle a little bit, but the big breakout comes up here. Again, that's when we have the parallel broken at roughly 2.5-ish, depending on when we get there. That is when you see the big momentum. But again, it's up to you. Buying down here at the IPO lows, sure, why not? Again, stop loss if you want to play that, have it below the IPO. But man, what a drag, right? 3 years, 4 years worth of nothing here. Yeah, amazing. You can just see here, bearish, right? Coming down again, bearish, bear flag. And now we're not making any bear flags, but we actually, looks like what I think is a we're capitulating here into the lows. Then hopefully we get a snapback here, like a V shape here, and then break. That would be extremely positive. We don't want this slow turn here, right? Because then you're making another bear flag potentially. So we want a snapback, boom, pull back, break above. That is as clean as it gets, really. Peninsula, I covered that yesterday. Again, I've said, as long as we're in this blue one here, you don't invest into Peninsula unless we hit the lows from 2020. That is where you can buy that, double bottom, you can say. And we are up a little bit nicely here. But again, we're still within, actually back in below the main downtrend and this whole bull flag kind of downtrend thing here. So if you want to play the breakout, I would say you have to get above roughly $2 Australian here before we see any momentum coming back in. So $2 roughly. Until then, unless you bought the lows here, I wouldn't be doing anything. It could also easily be that we're not holding here. We're going to come down here to like 0.6 for the next support. So Peninsula, again, nothing major to say here, no big breakouts or anything. SSAB, that is not a commodity stock by any means, but we have here, you can see the downtrend here again. Beautiful, beautiful. And I will say it again, beautiful bottoming over 10 years. 10 years inverted head and shoulders. Let's do the measurement here. 300% on top from the breakout, roughly there. So if that is the case and we get back to 160, you basically sell. But where do you buy? That is also important, right? Where do we buy? I will say if we gonna come down here to test this neckline, you can easily buy into that. And your stop loss at that point in time will be the initial parallel here, right? So getting down to here, roughly 37, all the way down to like 34, you can actually buy into that. Ideally, we hold here and then we start to go higher. Beautiful, actually. Great risk reward. We can actually just quickly add it here. Let's say we buy roughly here. Whoa, that's a big stop loss, right? Why did it do that? We buy roughly here, target. I'm always going a tad below just to be, I will use that one there. Makes sense. That one there. Stop loss somewhere around here, right? So you're talking 30 to 1. 30 to 1 if you buy here at roughly 38, let's call it. You ride it to 150. Stop loss roughly 33 below the neckline, below the uptrend. Pretty cool. That's amazing. Dividends 11%. So imagine if you can hold this for, let's say we get up to here, in like next 5 years' time, 10% dividend with the potential of 300%. Risk reward 30 to 1, right? That is cool. That is really amazing. Long-term investment, beautiful. But you have to get out the stop loss. You have to get out. Beautiful setup there. Long-term, fantastic. MRE. My first initial thought for there's nothing for you here, and there really isn't anything for you. I have a lower trend line coming up here, this little squeeze thing here with the plunge at 2020. But personally, I wouldn't be doing anything in this stock unless we start to get above here and get into these, $15, $16, basically breaking this whole downtrend and the pivot up there. We've gone sideways for like 15 years. I wouldn't be a part of anything here. You can see we're also breaking the trend line from the global financial crisis. So you can say if you want to have this kind of wedge pattern here overall, we're breaking down. So there's nothing for me here at all. If you want to buy low, again, if you really want to get in low here, I will say if we come back to the 2020 lows at like $6, cool, why not? But again, this is extremely messy. This is death. Arizona metals, I have it both on the OTC and the Canadian, by the way. Kind of like a mistake, but here we go. Arizona metals, we hit the topping pattern here perfectly, right? Boom. Wait for a break here. Anything above 1.50, 1.50 is a buy to me. You buy the breakout of the downtrend, you're getting above this whole support and resistance level here, 1.50, cool. Copper play, easy peasy. This is the AMC. Again, we had some buying over here, and we are still within the downtrend. The reason why it looks a little bit more weak here is because the Canadian dollar has been more weak compared to the USD. So it remains the same. We need to get above. Breakout here at roughly $2, then you get in. You're buying the breakout here from the entire downtrend for Arizona metals. Last but not least, PXT. They pay a good dividend, by the way, 11%. That's really amazing. However, overall, look at the uptrend here, the parallel broken. Boom, that is not good, right? We saw some weak bulls here. You can see we tried to break out, we couldn't really, and then boom. And this was also like a warning here. The measured move is like 10.7. But again, and you can see we have a big support level here with the highs from 2011 all the way into the lows of 2020. So if you want to get in here, I would say you can be buying at roughly $10 if you want to be involved in this one. But keep in mind, this is not a breakout kind of, play or anything. This is basically trying to buy it low, not the lowest point, but trying to buy it low here and then hopefully ride it higher next, into the coming years where hopefully energy will do better. I'm just checking here if there's a channel going on there. There's actually is. Did we touch it? No. So yeah, from like 11 and down, you could be trying to bottom fish. I wouldn't, recommend that per se. It takes a different kind of investment mindset, but yeah, that is how I would be playing it. There's nothing really coming down from the upper side here that makes sense. Maybe do we have something on the low end here? Yeah, you also have a channel going on here, right? You can see it there. So yeah, a little bit of a mixed one here, basically going sideways for 8 years. So yeah, that's my take on these 10 here. I will make a part 2, guys. Have a great day as always, guys. Cheers.